Hello, Steve. Hello, everybody.
Hello, everybody. Hey, Stella.
You're not Blake. What's happening?
I'm not. What the hell?
I think he's going to be joining us in a few minutes, so...
Yeah. That's what I understood as well.
Good.
Yeah, he needs 2 minutes or something.
I think
Okay.
the main move today, again, is metals, right? If you look at gold, we're at the bottom of the flag now. He's been forming a flag on the daily, and it looks like if it goes now below, what is it, 1700, then I think we have another $100 to the downside.
Might be the case. I like 1680. It's a very nice
1680, you're right, yeah.
area of support. I was expecting this move lower after we formed this pennant here, so no big deal. Can we overthrow this channel? Yes, we can. We actually can, and frequently, we see these moves. But nothing has changed in my thesis. As I said before, I think this is just an excellent opportunity to load up the boat before the market wakes up to reality once again. And the reality is that real yields are not going to be moving higher, and central banks are not going to be hiking rates earlier than they say they are. So, the only thing that matters is that. So, might take a few days for the market to realize the obvious. As it has many times in the past, but nothing is really changing. Now, having to do with the rest of the metals, nothing really to write home about. Palladium consolidating, platinum still also in a corrective channel. As I said before, copper is in a correction, although it's still very strong. Nickel is really taking a strong bidding today, after, of course, having had a massive move higher. I mean, it's a well-needed correction lower. Especially after this overthrow, I think we might have a lot more to go. I think healthy corrections in prolonged uptrends, nothing we haven't seen before, nothing that should not be expected. So, it is what it is, and we have to, we have to go with the flow and see if the rest of the assets are also going to follow, meaning if the dollar pairs are also going to continue correcting lower, if risk assets are going to produce some healthy correction. I think the chances have substantially increased. Still not slam dunk. I mean, not a 100% confirmed thing. So, yeah, that's a very general description of what I think about what has happened since yesterday, which in many cases is not a lot. Cable specifically looks to me like it's forming some type of a consolidation here. Given the big reversal lower, I think it's more than safe to say it's one of the dollar pairs that I like the most for a continuation lower. I think at least one more leg lower towards this channel's trend line support is more than likely. I mean, probably a lot of people got trapped here being long at the worst possible timing, as it usually happens, especially with the retail crowd. Now, as I said before, another interesting possible formation is here USD NOK. I'm monitoring this range, this rectangle. As long as we're within it, might be another bearish consolidation, but if we break above it, I think we're going to see an extension. Until that happens, hey, Blake.
Hello.
Join
the party.
Hey guys, sorry about that.
No problem, mate.
Deal with some stuff around here before I jumped on, and the timing just didn't work today. Did you want to finish up your thoughts, and then I'll take over and get through the bias chart?
It's okay. Go ahead, mate.
Okay, so I'm going to get through the bias chart just because I try to get as much done as possible before the equity markets open, and then I'll pass it back over to you guys. But we are seeing some strength in the dollar, and actually I don't know if you guys noticed, but we have a bear flag. Well, here, if you look at the Aussie dollar, we got this bear flag developing, and a move below 77.75 is what we were looking for, as was written here, 77.75. And you'll notice that the low is 77.71. So just kind of probing those stops, but I do think this is pretty important support right now for the market. And you know, I think there's a risk that the Aussie, you know, starts to trade back towards the 77-cent level. One of the things that one of the guys that I used to trade with, he sent me this Goldman report on how they're really bullish commodities, the reflation trade. He sent it on Monday. And I'm like, man, I don't know. The Aussie's trading kind of heavy. I mean, as you know, stocks bounce back, the Aussie's really just been kind of languishing. I know we had the RBA this week, but I think we really got to be careful here. I think a move, you know, below 77.50 will take us back to 77 cents. So I'm going to write that down. That I think this is going to be obviously really key support here. And then intraday, I think 77.50 is going to be some support right down at these, you know, like these little support levels here. Actually, I'm going to let me be a little bit more granular in that analysis. So I'm going to say 40 because I think that's actually more important. We won't turn bearish. We won't turn bearish unless we break below 77 cents on a closing basis. But I think that's, you know, kind of the risk at this point. All right. Let's take a look at resistance. Obviously, we're just not able to get back above the 78.40 level. But you know, yesterday I'm gonna point this out, and I don't want you to get too carried away on the short side of the Aussie at this point. Let's rewind to yesterday, right? Looking like we were bear flagging, we were kind of trying to break lower, and then all of a sudden we just reversed to back to new highs. Would it be possible today to do this and move right up to 78.50? just like what's happening right now? I think, yeah. I mean, it's entirely possible, unless the market really starts to care about this move in yields. You know, maybe yields back away. So I wouldn't get too comfortable yet. Okay. I do think resistance, you're going to have resistance this morning at 78.10, but more important resistance is going to be at 78.40. So I'm going to write down both those numbers. At 78.40. Okay. Let's go over to the euro. Let's start there. So the euro, one of the things I want to point out regarding the euro is, you know, the analysis that I posted this morning and basic technical analysis is that this is a 50% retracement. And when you only have like a 50% retracement, it's pretty shallow. You know, I was writing that the bulls probably wanted to see much more than that. You know, the bulls wanted to probably see more like a 78% retracement, because then that means we're going to consolidate these recent, you know, continue to consolidate rather. But the problem is that the bounce is fairly shallow. We couldn't even get to the 50% retracement. So now that risk is that we break back towards 120 and maybe even lower. So today, let's get rid of this. Today, I think these are the levels that we need to be aware of, you know, the 50% retracement and then also the 120 level. So I'm going to write down both of those. 120, that'll be probably pretty key. Resistance will be 121.15. And I won't say that that's key or critical. I just think that that's, you know, going to be support. Okay, let's look at cable. So the cable, also like the euro, really struggling at the 50% retrace, or excuse me, at the 38% retracement. 50% retracement is the Aussie, and then Kiwi's also 38% retracement, just FYI. But 38% retracement. UK budget just came out, and you know, we're just struggling here at 140. So risk is a break below 138.55. We should trade back down to 137.50. So I'm going to write down 138.50. It's 55, but it doesn't really matter. I think it's important support. And then 140 is resistance. And 140 is probably going to be pretty good resistance. It's a psychological number. We've already rejected it this morning. So, the high today is 140.006. So, and that's the 38% retracement. Break above that, we might be seeing 141. Remember, if the Aussie decides it wants to trade higher, like it did yesterday, the pound's probably going to do the exact same thing. So if you're looking at the Aussie and the Aussie does this reversal, we trade up to 78.50, 78.60. The pound's probably going to go whoop right through 140 and trade up towards 141. It is possible. Kiwi, 38% retracement. Now, this is one of the things that I wrote this morning in the analysis for basic technical analysis with the Kiwi. Let's go to the hourly and let's reverse back to yesterday. So yesterday we got this, double bottom, false breakdown. Neckline would be right here, right? So then you're like, okay, well, I'm going to get bullish, buy the Kiwi. This is in Asia now. You buy the Kiwi. It's not really going anywhere. And now we're kind of stalling. So I guess the point I'm trying to make here is, just as we got a false breakdown on the downside yesterday, maybe we got a false breakout on the upside. Everybody trying to play that double bottom or false breakdown. So I think that we have to break above today's highs in order for us to be bullish intraday. So that comes in at 73.05. I mean, you can write down 73, whatever. Support here is going to be 72 cents, obviously, and that's going to be critical as well. So, if you want to, let's just, I guess it's 72.10. So let's just take a step back for a moment. Let's look at this Kiwi. Let's say you have this amazing desire to trade the Kiwi. You want to be, like, I want to trade the Kiwi. I just want to do it. Well, if you want to be on the safe side of the Kiwi, just trade it above 73.05 or below 72.05, right? So that's it. But by the way, I just want to let you guys know, as I'm finishing up here, Stelios is going to be here. Steve has a personal issue he has to tend to.
I'm here. Yep, I'm here.
Yeah,
don't worry.
Stelios will be here after I'm done wrapping up. I'll jump back in the chat room. Stelios will probably take you for a couple minutes before we go. Steve will be back. He just has to deal with it's a home issue. So Steve's got a broken home. Steve comes from a broken home.
Oh my God.
His mama no love him. No, I'm just kidding. He's got to deal with the house.
He has a leak at home or something. But anyway, it doesn't matter. I'll be here.
Hey, look, in the United States where I live, like, your homes are pretty new, or, in some cases, maybe, 10, 20 years old, like where I live, right? An old house is like 40 or 50 years old, and those are old, but you guys, in Athens, I mean, how old's your building?
We have old buildings. Yeah. My house is 40 years old. Yeah.
40?
My father built it.
That's pretty. I was going to say that's pretty new. How about Steve's is probably what?
It's probably the same. But anyway, it doesn't matter. Yeah.
Maybe because you guys, I guess, are on the outskirts of town. It's not like Acropolis old.
Not quite.
No. Okay. I mean, what's like an older?
Yeah, in the center. My mother has a building in the center of Athens, which was built in like 1950. Anyway,
wow.
Yeah.
That's not that bad. I was thinking you guys might have home, like, you know, you go into like the Northeast in the United States, you're like in New York or New Jersey, you might be living in a house that's 100 and some odd years old.
Yeah, like in London, I used to live in a flat which was from the 1870s or something like that. So really old. Yeah. Anyway, it is what it is.
By the way, Chad asks about the flag and the Aussie. So that points to 75.25 if it plays out. Crazy, right? Not saying it will, just, you know, we gotta be
it kind of has to play out now, though, because then if it doesn't, then the flag becomes too, the flag becomes too big, and it's probably going to negate.
Yeah, we're almost at the breaking point, I would say. Once we're past 50%, the flag is more than 50% of the distance of the pole. So you're right, it really has to play out now, or close, today or the next, probably 24 hours or so. I think you're right.
Yeah.
You're right. Okay, dollar Canadian. Speaking of flags, or in this case, an inverted head and shoulder pattern, but it could be a flag. Resistance right now is going to be these highs, which is 126. Let's just call it 126.60. Then we have to look at 127, 126.60, then 127.50. Okay, and 127.50 is right up here. Okay, so support, I mean, we're holding, but this could come all the way back down to 125.80. 618. Oh, we're getting our very early morning juice in the stock market, as always. Okay, so the dollar Swiss, I tweeted this, and I think this is important. People probably on the first attempt to the Swissy sold it, on this move to 91.80. It's previous. Here, let's go over the weekly chart and let me spike low, 2018, spike low, post-COVID move. We are just basically knocking our head back up against it. And you can see all of the how many times it's acted as resistance. So now that yields are running higher, I actually think that the dollar Swiss will go higher. And we hit resistance, and I'm like, I didn't short it yesterday, but I was thinking yesterday, I'm like, man, that's probably a great short. It's probably, just a great setup to be on the short side. And when and then yesterday, by the end of the day, after it dropped, 30, 40 pips, I'm like, gosh, dang it. I knew I should have shorted it. I didn't do it, but I'm like, I should have shorted it. And then when I got up this morning and we're back at 92 cents, I'm like, ooh, I'm glad I didn't short it. Because now you got people that shorted it. They're like, okay, we're easy heading back to 90 cents. But here we are back at 92. So now you got people that are probably short, that are like, oh crap, it's really not going down. And the fact of the matter is, for us, we break above this 38% retracement that comes in at 92. Then it's bullish if it breaks out. So I'm going to write down 92 cents. If we break that, I mean, you guys already know it's already bullish. And the reason why it's bullish, if you don't recall from our analysis for the last week, is that we're above this broken trend line, right? So it became bullish. Now it becomes probably really bullish above 92 cents. So dips are, I was thinking, okay, well, we might get a dip back to 91 cents is what I was thinking. But now I think you're lucky if you get a dip to 91.35. All right. Jamming up the stock market. NASDAQ is still underperforming, just FYI. Dollar yen, same story as the dollar Swiss. It's bullish. It's bullish while we're above this pink, broken trend line. That's multi, month. And right now, support is at 106.20 and resistance, you got the 618 that's right here, but we might make a move to 108 next. I mean, you can see all this horizontal resistance here at 107, roughly 107.15. I'm going to write down two levels. And I'm not trading it, by the way, just letting you guys know. And then this is 106.25 is support, and it's bullish. Yields look bullish. Dollar yen is, strong. I have this feeling. I was, just thinking about the stock market here, and I'm thinking, where we're at in the S&P near the $4,000 range. I try to think like 6 months from now. 6 months from now, I'm thinking that we are going to be asking ourselves this question. Why wasn't I a seller up there? I really do feel like in 6 months' time, we're going to be trading closer to 3,000 than we are to 4,000.
It's probably because if you've done that for the last 9 years, you got your ass handed to you.
Yeah, that's true. But now that we've got, the big liquidity surge from COVID, and, everybody knows that we're going to get, fiscal spending here in the US. Everybody knows it's going to be like the roaring 1920s. Once everybody rips off their masks like they did in Texas yesterday, where it's not mandated. Can you believe Texas has
incredible.
What's really incredible about that, Stelios, and just from what I read, and I can't remember where I read it, but Texas has more COVID cases than Mexico, the country.
Wow.
Now, Texas is a big place, but I'm sure, it's they're probably getting a lot of, the governor there is probably getting a lot of slack, but it's like, is this premature? Well, I guess we're going to find out, right?
Yep.
Okay. 39.20. And then support here is going to be 38.12. I don't tell very many people this, but for example, it kind of hits closer to home when, we had a parent in my son's soccer team who passed from COVID over the holidays, so it's just like, whatever, I guess, you guys are everybody's got their opinion. So I'm just wondering, if it's, here's the problem, I guess, market related. This is why this is an issue. If we open up too early, it's the same issue that we had last year. If we open up too early, like certain states do, and then we see a resurgence, is that going to impact the reopening process in what people are viewing in the markets, as like, hey, we're everything's on track to be much better. I'm optimistic, but let's hope that things continue to settle down. I did see a picture of like we were ticking higher in COVID cases in Texas too, the last week, but still, I don't know. Interesting to hear what Paulie has to say about it, since he lives in San Antonio and I do not live in Texas anymore. So I'm looking at the S&P triangle pattern, 38.20, 39.20. You can see that this is capping us here, right? And then support's going to be somewhere down here around this trend line, right around here. So I just think you got to just, imagine it in a range at the moment. Okay, continuing on. So I don't know why I skipped over US dollar, Norwegian krona, but here it is. Excuse me, I'm going to sneeze. Ooh, oh man, I unmuted.
Bless you.
Sorry. It's allergy season here. It's going to be 80 degrees here today. And so everything's blooming. The problem is when everything blooms here, before it goes dead, everything dies when we hit 100 degrees. But at 80 degrees, things are blooming. And so I'm going to spend the next couple of months of sneezing.
That's nice.
Fun. Yeah, it's great. It's always great. All right, so the US dollar, Norwegian krona. I do believe that we had a false breakdown last week. And I like the fact that we held the 618. So the 618, let's just write down 845 as key support. That's key. I think if you get an opportunity to buy down there, you have to be a buyer down there. Resistance intraday, though, is going to be 855. and then back at 865. So I'm going to write down both numbers and we just kind of deal with it as we go. And the only way we're going to get back to 855 or 865 is if stocks come down. That's it. Because as Stelios pointed out, right, Stel, it's like a great place to hide out when there's risk aversion. Speaking of which, like the dollar Mexican peso is one of those situations where shallow retracement, holding the 38% retracement, as long as we're above 2047, which is, I'll call it 2048. I think the risk is higher because that's a very shallow retracement. And as I was telling people, on the face webinar, but I want to spend more time talking to you guys about this because this is the training aspect of it where I don't want to enlighten everybody. I'd like to enlighten you guys, the, ForexAnalytix subscribers. 38% retracement it's shallow. 50% retracement, you still have a really good chance of continuation. 618, now your chances are now dimming, and a 786 is more of like we're going to go sideways. So when I'm looking at fibs, if you got a 38% retracement, that's a pretty bullish sign. You can see how my arrows are like slowly deteriorating, because once we get to a 618, and even though this is the most common retracement, we start getting into the risk of consolidation. Oh crap, wrong thing. We starting to get into the risk of, consolidation once you start getting into the 618, 786 retracement. If you're a bull, you don't want to see the 618 retracement. That doesn't mean we can't get a bounce, but I'm just saying if you're an overall bull, you just don't want to see that. I hope that made sense. Does that make sense still? I don't know.
Yeah, of course it does. No, it does.
Okay, good. So because we have a very shallow retracement of only a 38%, not even a 38%, the risk of the NASDAQ new lows, S&P new lows. I'm telling you, man, this market looks like crap. Okay, we are at 2085 right now, and the next resistance is 2105. So. What's beeping? Dollar yen. Wow. Okay, so you thought I was broke. Like, oh man, my internet has just stopped. Just kidding. All right, here's the dollar yen. I'm going to write down 107.15. Sorry. And here's the thing is we're hitting new highs as we are divergent in relative strength. I'm not saying that we stop here. Oh, I already wrote down 107.15. I'm not saying that we stop here, but you got to be a little careful because we are divergent. But if yields continue to go up, they continue to go up. Dollar index, 50% retracement. Okay. So because it's at a 50% retracement, there's still a shot that we can, break higher. I do think resistance today is going to be 91.40, support 90.55, 90.55, 91.40. Gold, silver, Bitcoin. Okay, so let's start with gold. Man, gold's heavy. Back at support. The 618 retracement. Hey, Stella, how do you feel about these precious metals? They are trading heavy, aren't they?
They are trading heavy, yes. And I said in the chat room this morning, if you're not, in my opinion, if somebody is bullish precious metals in the medium term like I am, and you don't have position, this is probably a good time to start slowly loading up, because we're at support in both silver and gold. I'm going to show that a little bit later when you're done.
Okay.
It's very easy for gold to get to 1600. If it does, I think it's going to be a gift. But I think it's a good time to start loading up now.
All right. Well, as we've talked about this, the day that the Fed says, hey, we're going to do some sort of yield curve control, That's the day that you really want to be long gold and short dollars. So, you
Yeah.
know, are we one step closer to that day? You know, with yield screaming, maybe we are, you know. But here's silver. So silver obviously support's been at 26 bucks, and we've dipped down to 25.80. We might actually even dip down to 25.60, which would be the trend line. So I'm actually going to write that down as being really important support. So 25.60, really key, because that's the wedge support, you know, and if you get below there, I don't know if you really want to be long silver near term. I'm not saying that Stelios is wrong, because
near term, yeah, we could go to 24.
Yeah, because we could trade down to 24, maybe even 22 again.
Yeah, 22. Yeah.
You know, so you know, am I bearish silver? No, not. And I actually think that if you get it at 22, it's probably the place you want to own it. But you know, could we get down there? Theoretically, yeah. Resistance is at 27 near term. I think anybody who's long right now is probably like, yes, please give me 27. And gold is bearish while we're below 1760, by the way. Because we have to still complete, I'm sorry, I should go back to my gold comments really quick. We should complete our AB equals CD or flag pattern. Will take us right to here, 1675 eventually. Should, not saying it will, it should. Last but not least, let's take a look at Bitcoin. Bitcoin's a lot stronger today than I thought it'd be. Like, I was surprised when I got up this morning and we were trading at 52, but notice where we traded. 52, we almost traded to 53,000 and then came off. 52 has been 52 has been resistance. The underside of that broken trend line held. 52,000, I think we've had it written as our bias chart resistance almost every day, right? So today we can write down 53,000 because, oh no, 52.6, screw it. I'm going to write down 52 again. So today just proved how important 52,000 is in crypto, in Bitcoin. Support intraday will be basically 47,000. Okay. 42,000 is extremely important. 47,000 will be intraday support. Okay. So your bias chart is finished. There you go.
I took a snap.
Thank you. And yeah, so Stelios, I'm going to pass it over to you, and you can talk about anything you want. I'm just going to put myself on mute.
Yep.
But I'll be here. So
okay, I'll take like 5 minutes. I don't have that many things to say, but I'll take 5 minutes just to go through a few things.
Do your stuff, Blake.
Screen.
Oh, there we go. Steve, you're back.
He's back.
Okay. Cool.
Yeah, that was fast actually. They can't do
good. We told everybody that you came from a broken home.
Yeah. So
all right.
Thank you, Blake.
I'll let you guys go. All right. See you later.
So just a few comments from me. You know, I always like to look at the bigger picture, and for me, I've said this before, and I've said it again this morning in the chat room. Nothing has changed for me fundamentally yet. But you know, we've said for a while that the valuations are stretched, et cetera, but the trigger is not there yet. I am looking at equities, and we talked about what was it, 3,800, which I think if it breaks, that's going to be big. But really, the big level is 36.65ish, which will be making new lows. If that happens, then I think we should really be careful and looking at risk of trades. I think yields is still the one thing that I'm really looking at. And, you know, again, this range, this area around 150, I think above 150 on a daily close is very important. And, you know, I've been looking at metals. We talked about them. Gold, we're very close to the bottom of this flaggish thing. If that breaks, we'll go to 1600. I'm probably going to wait for that to get long gold. Silver is the one I talked about before. This is a pretty important level we're at here. It's kind of confluence. If this breaks, then I wouldn't be surprised if we see 24s and then 22s. As I said before, I am already long silver from roughly these levels, actually just marginally below. If I wasn't long, I'd be buying here some, and then I would be adding more and more.
Long like Donkey Kong.
Yeah, but and I will add eventually. Is it going to be lower or higher? It doesn't. I don't care actually, but I'm going to be adding lower if we get to 24s, or if we break out, then I'm definitely going to add more. But that's important. The other thing I'm looking at, is what risk-off trades do we put on? I know I sound like a heretic because I love Norway. I still think dollar Norway is probably the one I'm going to be buying. I don't think I've ever bought this pair, but I will be buying it if we get a proper reversal. If we get, if we break above 870, I think, or something like that, then I think that's going to be a good sign, especially if we see risk off happening. If we get the S&P breaking below 3,800, I think that's going to be a good risk off trade. But anyway, if anybody's bearish risk, I think that's one that's going to be moving a lot. Same with USD MXN, and the Aussie as well is interesting because let's have a look at the weekly. Actually, no, you can see on the daily as well. We had this very, very big resistance zone. We almost got there. So if we get anywhere near that, I think that's another nice short where you know what your risk is. You're risking the highs basically, which I think it's a good trade to have. But really, I'm just concentrating on metals. I usually am, because I like the fact that these are, if you take a medium-term view. Remember last time I traded silver, it took almost 2 years, but it gave me over 50%. So I know that in the medium term, there's no way silver and gold can go down and stay a lot lower, simply because of inflation, of the monetary easing, because of everything. So
I want to know what Zeberg thinks.
Yeah. We don't care.
No, I do. I mean, the more bearish he is, the more bullish I have to be.
Yeah, I don't disagree. And actually, for the same reason, I also think that equities in general, in the medium term, indices are going up simply because of inflation, right? Of course they are.
Of course they are.
But you look at one, you look at the other. If you look at the ratio of S&P to gold or S&P to silver, that's at pretty high levels, and obviously not at the highs. The 2000 peak was the absolute high, but still, it's a pretty high level. So I always like to buy silver and gold when they're underperforming, because I have this natural bias to want to be long those. Obviously, people are going to say, "Oh, what about cryptos? You missed a 3,000% rally in 3 weeks." Yes, I have. Fine. But cryptos for me, they scare me because they're assets which theoretically could go to zero, but gold and silver can't. That's the thing. Obviously, I'm an old guy. I'm not a young 20-something who swear by cryptos. But that's just my view, and I don't mind missing a trade or 2 or 10, and I like to concentrate on things I understand.
I think that's one of the myths within this cult the crypto fans have cultivated.
Yeah.
That people that are not bullish are just don't get it. You know what I mean?
Yeah.
Just don't understand.
Yeah.
Yeah, that's not exactly the case. I mean, you studied programming as your first degree.
Yep.
And I've been into computers, and I'm a fan of technology since I was 4 years old. So it's not that I don't get it, it's that I get it and I don't see the value. Now, those two things are not related with price, because as Buffett has said, the market is a voting machine in the short and medium term, and it's a weighing machine, in the long term. So for the time being, yes, there's a whole fuss about it. That they've rebranded. I mean, you can see how much it's all about sentiment by the fact that they've had to, in essence, rebrand cryptocurrencies and Bitcoin 3-4 times during the past few years, because the way they initially presented it was obviously dysfunctional. I mean, it's not a currency to be used like in transactions. We know that it's completely inefficient in that, so they had to change that narrative.
The capacity is not there anyway. So they changed that.
They changed the narrative a few times, but the market still didn't give a shit.
Yeah.
So it's more than obvious. It's all about sentiment, right?
Yeah. And they're talking about market cap of Bitcoin. It's like talking about market cap of the dollar. It doesn't make any sense. If it's a currency, you shouldn't care about market cap or whatever. But anyway, yeah, it is what it is. It has its fan base. It definitely has its advantages. I am not going to deny that. It's just something that does not attract me. So,
hey guys, just a quick heads up. We have ISM.
Oh yeah, we do in 2 minutes.
We do in just a couple minutes. Just a little heads up.
You see, Stelio, when somebody knows how to do his work.
That's right. Yeah. Oh, who's here giving you guys a heads up? Who's giving you guys a heads up? Okay. Just kidding.
Do you want to show anything, Steve? Do you want to? I'm done with.
Yeah, absolutely. I'm gonna take questions, etc. Let me see. We have 3 minutes for ISM. So ISM expectations, from what I see, is 58.7, which is exactly the same number we previously got. So the expectations is that we're gonna get the same print like last month. So let's see what we get.
And Steve, I don't think we're in a market right now where it's strong data equals strong dollar. I think it's strong data equals weak dollar, or weak data equals strong dollar. That maybe not at the initial reaction, but remember, if the data is weak, we actually might get some risk off, and if we get risk off, then the dollar strengthens. So
why do you think that's the case, Blake?
Because because I think that the market has gotten to a point where it now is looking at the dollar as more of a risk on, risk off proxy. And so I think the market's not going to take kindly if economic data starts to show weakness versus strength. Everybody's expecting a boom. Everybody's expecting good data to continue. And if we start to see data weaken, you're going to have people going, oh crap, that's not a good thing. And I think that you start to see the dollar strengthen as a result. By the way, S&Ps are at their lows, Nasdaq's at their lows as well.
Yes, so, that's what I'm monitoring here, Blake. This is the formation I'm actually monitoring. I think
we can't see your screen, Steve.
Oh, you're still sharing, Stelio?
I stopped sharing.
Sorry.
I thought you were going to take over. Sorry.
Yeah, this is the formation I'm looking at, Blake. So I think this is going to be key. I think we break down from this trend line, and we're definitely on our way to some deeper corrective move. I like how it perfectly retested this trend line at the lows. So let's see. Yes, we are at the lows. 10 seconds, by the way.
Yep.
Until data. So let's see what number we get.
9 and
let's see, 55.3. So weaker than expected.
Employment number also weaker than expected. Prices paid higher. Interesting.
Yeah.
New orders a lot weaker. Yeah. Okay. It's not great.
Let's see. So far, nothing.
Can you say stagflation? Can everybody say stagflation all at once? Higher inflation, mediocre growth, no growth. Yeah, stagflation.
Scary, actually.
If only we had zero growth, that would be good. But unfortunately, in real terms, we have negative growth for many, 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 many years. And I find it a joke. In general, I've said it before, I find it a joke. The fact that we measure growth, even if we take inflation and the flawed way with which it's measured, which also pumps up the real GDP, I mean, the way we present real GDP, even if we take that out of the equation and we make the assumption that inflation is measured properly, so GDP is what is actually posted is true, which I don't think that's the case. It's unbelievable in my mind that we don't connect yearly growth with yearly increase in debt. I mean, how exactly can you say my GDP grew by 2%, but my debt increased in the same year by 8%, and I'm actually growing? I mean, if you need 8 percentage points of your GDP to have a 2% growth, is this actually growth?
Yeah. Oh, stocks are going down. New lows.
Yeah, stocks are at the
By the way,
lows, and they're
we don't
pushing.
have True Fire webinar today, right? It's tomorrow, Monday and Thursday.
Monday and Thursday, Stelio. That is absolutely right.
Okay.
So yeah, well, there's no pressure in time.
And also, do you remember the movie Police Academy?
Yeah, absolutely.
With
I mean, who can forget?
Commandant Lassard. You remind me of him when you say many times.
Yeah. But
Yeah.
the best of all is the blue oyster scene.
Yeah.
You remember that they sent
Yeah, I
them
remember that,
at the gay bar Blue Oyster.
Yeah.
The party, you know, don't say it to anybody, but the party is actually at the Blue Oyster bar.
Yeah, that's good. No worries, you go. It's tomorrow. Yeah, no problem. Okay.
So Stelio, see you at the Blue Oyster bar, okay, bro?
See you, man. See ya.
Yeah. We'll all have a little party afterwards there. Okay, so here is here's another look of the S&P in the 4-hour chart. The only reason I wanted to show this is because this is the only bullish type of interpretation you can have. I mean that this is part of, like, this channel is a part of this consolidation. So, in the daily chart, this is what I'm looking, what I showed before. There's always like two sides at a coin. Somebody, that's really bullish can be looking at it in this way. So in this case, you can make the argument that as long as we stay above like 37.80, we're still in some type of a bullish consolidation. In any case, I think that we'll end up retesting the lows, and we take it from there. But it looks more and more likely that we're about to have some type of well needed correction. Now, if you look at the VIX is producing today so far at least a nice bullish engulfing candlestick after again a series of high lows. I think the VIX is waking up slowly, and I think it's going to have another spike higher. I think next one is actually going to be much higher. It's going to be towards the 45 level. I think we're getting there. I'm quite optimistic that we're getting there. So let's see. I mean, we need to take one level at a time. For the time being, I think that a move lower in the risk assets will definitely keep affecting the metals, and is also likely to affect cryptocurrencies as well. So I don't think it's easy for us to see cryptocurrencies diverging and posting new highs as the S&P is actually like tumbling lower, if that's the case. So I think that might be the catalyst of another leg lower in cryptos. So, I would be very, very careful with cryptos here, because if the indices are rolling over, and as you see, Ethereum's response higher has been much more tepid than the equivalent one in Bitcoin. So especially the Ethereum chart looks to me a lot more clean, having to do with this probably being a corrective move higher in a bigger correction lower. So I think it's a likely scenario that we haven't finished our move to the we haven't finished our move to the downside. Now, having to do with yields, you mentioned that. Listen, it is an important milestone that we actually broke higher from this channel in yields, because now we invalidated the most obvious scenario that this was a very simple to read correction. So we have something different here. I still think it's likely to be a corrective move, but it's definitely a more complex one. So we broke higher from there, and yes, yields might have more to go. I think the next move higher might be closer to 2%, actually. I mean, 195, somewhere there, seems to be an interesting area. And I think that from this point on, 127 should be support. So any pullback towards 127 is probably buying opportunity. So probably something like that might be unfolding here. That's what I think. Anyhow, let me see if we have any questions to take. Let me see what you want to have a look at. Platinum, palladium, nickel. Yes, we had a look at those previously in phase one. So let me start by nickel, because as I said, I think nickel is the one that's taking, the biggest bidding. Where is the chart? Come on. There it is. Okay, so quite a big day lower, but keep the big picture in mind here, right? Massive move higher, nice overthrow. And I think we're unfolding some type of a correction, which, keep in mind, can prove to be rather deep, right? I mean, we got this move, might test this channel, do something like this, go lower, then go much higher, something like this. So keep that in mind, right? I mean, something like this might be unfolding here. Copper holding much better, although keep in mind that it's very hard for copper to keep diverging that much if risk assets take a tumble. So risk reward in copper is definitely not being long here. I mean, it still looks in isolation. That might still easily be interpreted as a bullish consolidation, but looking what other things are doing, I would be very, very careful. Now, having to do with platinum, platinum is still holding this support area, right? 1170. I said it's the first key area of interest. That doesn't mean that it can't unfold, into a bigger corrective move lower, in which case we have like 1130 following that, and then we have like 1060, 1070. But I do believe that the move lower in platinum is clearly corrective as well. So I think that platinum should be bought. Now, you either start scaling in on the way down slowly, or you wait for a breakout from this descending channel and then buy a full position. It depends on, I was explaining the other day that it depends on, your trading preference. I mean, what's your trading style? Do you want to scale in positions as they correct? Do you want to go all in after you have more confirmation? It's totally up to you. 1170 though is the first area of support. The market has already held that level for 3 consecutive days, and I don't consider this to be a coincidence. But on the other hand, it hasn't managed to really, produce a rally out of it. So this area has proved that it's important, but on the other hand, the bulls don't seem to be able to take advantage of that to produce a rally. So we might have more to go to the downside, right? And I already gave you the next downside areas of support that I think are of interest. Now, having to do with natural gas, nice reaction from the support area. We're retesting this area here at 288 as the resistance. I wouldn't be surprised if we have more another leg lower before we go higher, but I think that natural gas as well, eventually, and as long as it's holding above the broken channel, will continue its way higher to much higher prices within the year. Steve, when you look at energy fuels in comparison, it's uranium. Ticker is UUUU. Absolutely. Me. Let's see. Yeah. So, I mean, such an easy trade, this one. It was beautiful bull flag. I mean, look at this. And look at this bottoming pattern, right? Beautiful inverted head and shoulders formation. Look at this. Very nice reversal pattern. Then vertical move higher, bull flag, vertical move higher, pennant. Now be a little bit careful here. I don't like this candlestick at all, because we fulfilled the minimum expectations, breaking out from the pennant. What was that? A new high, right? We clearly got that. I want to see how this candle closes. Not a beautiful candle at all. And look at this divergence, right? There's been some time now that we're diverging. So we might be getting closer to a proper corrective move. What would a proper corrective move be? Something like this. Perhaps back to 450, right? Somewhere there. 450 is definitely a level of interest. What's this daily candlestick? This is not the place to be buying anymore. I would like to see a deeper corrective move lower, but I think this is extremely bullish. Look at this. There is so much more it can go to the upside. And this is such an impulsive move higher. But as I said, not in the short term. The risk reward is not good in the short term. It is great though in the medium term, right? So let's wait for some proper, some proper corrective move to unfold, and I think then you should be looking to buy and not to sell. I think you should be buying this, not now though. So remind me again in a few days if it starts, if the correction starts, unfolding, so we can then, when we have more candlesticks, we can start getting an idea of the structure of the corrective pattern. And it's going to be much easier than to extrapolate potential downside targets of interest to be a buyer, right? Let me see. Where does flag point to the Aussie? I'm assuming Blake answered to that because it's a long time ago. Bunds. Yes, Bunds. Okay, so the Bunds. Let's pull up the chart. Here it is. So, listen. Medium term. Bearish. Why? Because they broke down from this ascending channel. You can see it in red. Long term, they remain bullish. Why? Because we remain in this broader channel in what is clearly a bullish formation, right? So short to medium term, bearish, because we have a lot of room to move closer to the bottom of this broad channel, right? 175.60 should be resistance. Longer term, they remain bullish. But as I said, there is room to make more money to the downside. So the opposite obviously applies to yields, right? So the yields should have more room to move higher in the bunds. Do I believe it's going to be a long-term move? Do I believe we've probably found like the all-time high? I'm very, very skeptical about that. Very, very skeptical. In order for me to turn like longer-term bearish in the bunds, I would want to see this trend line get taken out, but we have a lot more to go to even consider that. I like the impulsive nature of the move lower though, so even in the context of a larger correction, I think there is more to go. And nice reversal today, by the way, right? So yeah, I think I covered both the short to medium term and the longer term in the case of bonds. Nickel, copper, we covered those.
Okay.
Platinum, palladium, nickel, we covered those. USD, yen, close to long-term trend line. Did Blake cover that, Stelio?
He did talk about dollar yen. He talked about it on face, right? I don't know. Actually, yeah, he did. Sorry, he did talk about it on the on the buy chart as well. Yeah.
Okay. Let me have a look at it as well in case. No, sorry. Here it is. Okay, there it is. Listen, this is some type of a bullish breakout, if you're asking me. We've broken through several trend lines, right? So the path of least resistance, I think, seems to be higher. So keep that in mind when you're trading like yen pairs, unless this is an overthrow, right? Which we're going to find out. I'm looking at this green channel. You can see it here. Let's see how we close today. If we turn lower and we stay within the context of this green channel, nothing really much to do. If we do break higher, look towards 108 next. I remain very, very skeptical with the USD yen because of its, not so recent past, which is extremely choppy. I haven't traded it in a long time, and I'm not eager to jump on it as we speak. By the way, for those of you that were in the first part of phase, you remember I said I think cable is very appealing to the downside. I think it's very, very likely that we might have already seen the high of this corrective consolidation. So keep that in mind. I do like cable to the downside for at least one more leg lower towards 137, 137.20. I know that other things are going to move lower against the dollar as well if that's the case. But having to do with the pattern, I specifically like the cable very much. So, if I had to choose one, I would probably choose the cable to express short-term dollar bullishness. I'm stressing out the words, the phrase short-term, right? Because my long-term bias is bearish the dollar. Okay, that's it
great.
Then.
Thank you, Steve.
Okay,
That was good.
Blake, talk to you later, guys. And
thank you very much, everybody.
See you again on
you
Thanks,
Facebook.
everybody. See you guys.
Yeah. They'll see you, Blake, on the daily roundup in a few hours in any case.
Yeah.
Bye-bye.
Thanks, everybody. Bye.